So are we in for a massive correction? Has the bull run its course? Time to hit the panic button? Well, that is exactly what we're going to discuss in this month's edition of the Vantage Report. You don't have to look very far to find somebody who thinks we are on the precipice of a major market shift. For those of us that had our chips on the board back in 2008, there is an eerie similarity to the market sentiment right now, and it's giving a lot of people a cause for concern. I know that myself and my partners at Vantage are having a serious number of conversations with anxious property owners who are very, very worried that they're going to miss the boat or miss their window to capture their real estate gains they've gotten over the last few years. People are anxious about what the federal government might do with respect to capital gains exemption. People are anxious about what other mandates are going to come to Canada that might cause people to want to leave. And so, rightfully so, we're having these types of conversations with people. Obviously, nobody wants to get caught with their pants down when the tide goes out. Markets can be extremely emotional. They swing like a pendulum back and forth between fear and greed, with fear being sold to us like crack right now by the media. So who do we put our faith in? The media? The local realtors? Uncle Larry? My personal belief is that we need to make data-driven decisions, not ones based on hype or emotion. Everyone has their opinion and has their bias, but data never lies. So with that in mind, let's do a deep dive into the data as we enter the next quarter of 2021. The average transaction value in Kelowna is $800,000. That's up nearly 30% from $670,000 this time last year. In the last month alone, we've had over $450 million worth of sales volume, which is tremendous for the local economy. Sales over the last 3 months have kept going at a blistering pace, but we are now seeing a slight inversion over what we saw in the third and fourth quarters of 2020 last year. You see, in June of 2020, the sales were 508 versus 2021's 763 sales. But now that we're through September, what we've found is that things have flipped. Last year we saw 787 sales compared to this year's 583. So does that mean that market demand has dropped off? Well, I don't think so. I think this has more to do with available inventory or lack thereof. You see, this time last year, we were sitting at about 2,500 active listings, whereas this year, we're down at just over 1,300. That means buyers have half the homes to select from, which makes it highly competitive for buyers still. Also, this reported drop in sales could likely be attributed to the 3 major projects that went online in August and September this year and sold out for hundreds of units, which again, these sales go unreported. So there actually has been a lot of sales activity that is not even mentioned on the MLS. When we look at supply and demand, the one thing we keep an eye on is the absorption rate, or months of inventory. And what we've just seen this month for the first time in 6 months is a reversal of the trend of the absorption rate increasing. So you can see back in March where we had nearly only 1 month worth of inventory, and it had incrementally crept up and up till last month. And now we've actually seen it come down for the first time in 6. So that's actually a really good sign for market health and continued upward pressure on pricing. This was actually a surprise to me, as I fully expected that trend to continue and for the market to cool off with the weather. But things continue to roll along pretty nicely. The average home taking 41 days to sell compared to last year's 45. And the average home is selling at basically full price in comparison to last year when homes were selling at around 98% of their list price. So overall, homes are selling faster and for more money, which is a pretty good sign that the market will continue at a heated pace. Now, this came as a shock. The average single family home is now $960,000. And last month we reported a 3% increase in pricing for single family homes, so I would not be at all surprised to see in the news a headline that reads, "Average home in Kelowna exceeds $1 million before this year is out." Now, the same can be said for condos, where condo prices over the last year have jumped from an average of $389 to $473. So I very much expect to see the average 2-bedroom condominium in Kelowna be north of $500,000 before the year is out. Now, pricing is what we call a lag indicator. This is not what we use to try to predict the future. In order to do that properly, we need to take a look at what actually drives the market from the bottom up. The first thing we look for is population growth, or inward migration. Are people moving to the region? And I think we know the answer is a resounding yes. People are coming here, they're moving here for the relative affordability, believe it or not, from big centers like Vancouver and Toronto. They're moving here for the Four Seasons lifestyle and the fact that the trend from working from home is continuing, which means people are untethered from their office and they're looking for the best lifestyle they can get. So continued growth in terms of our population is stimulating the market from the bottom up. Chatting with my friend that does new development sales, he tells me that their registration lists and the buyers snapping up the pre-sales are predominantly from out of town. And our local market is seeing over 35% of the transactions coming from out of town. This is higher than we've ever seen it before. So this speaks to massive influx of people moving to the neighborhood. And anybody driving around on our highways lately will tell you firsthand, there seems to be a lot more people on those roads. Another trend we're seeing in the new home sales side of things is that it is attracting first-time buyers in droves. Now, first-time buyers are an indicator of market health. And although the single-family home may be out of reach for them, or they can't be competitive in an all-cash situation on the resale market, the new home market does provide an opportunity for them, or it allows them to get their foot on the property ladder while over the next year they put the pieces together in order to be able to finance it. They don't find themselves in competition paying over list, and they're able to get something nice, new, and something that will suit their needs and get their, like I say, get their foot on the property ladder. So as long as we have low supply, and you can see we're back on the downward trend, and we have people moving to the area, which creates demand, there really is no opportunity for a price contraction because price is always a function of supply and demand. Now you might be saying, AJ, did you not read the CMHC article? They just put Canada on high alert for being overvalued. What you have to realize is that for somebody in Vancouver who sells a $700,000 condo, one-bedroom condo, can move here and either buy a 3-bedroom townhouse, a beautiful 3-bedroom townhouse with a 2-car garage. They are looking at that as a huge increase in lifestyle, a massive jump up in affordability, and just an overall better quality of life in Kelowna. So you're gonna see more and more people cashing out of major centers, selling little condos and buying townhomes here. Now, I watch the market clock to look at what's happening in the market, where are we in terms of the beginning, middle, or end of the boom. And what I can tell you is at this moment, although we are seeing many of the things that tell us we're getting towards the end of the boom, there is nothing in the data yet to suggest that we're entering into a slump. Let's take a quick look at what would need to happen for the market to start turning downwards. The first thing that needs to happen is we would need to see a shrink or contraction in GDP. That's the overall level of commerce that's taking place in the region. Well, that is simply not taking place at this point. Car dealerships, boat dealerships, construction with new home starts up 20% year over year. None of this contraction is taking place. Our GDP is still growing. Now, the next thing that would need to happen after a contraction of GDP would be an increase in unemployment. But we know that we actually have the second lowest unemployment here in the Okanagan and anywhere in Canada. With a contracting economy and a rise in unemployment, you start to see what we call a brain drain. We saw this when everybody was leaving and going to Alberta for work before. We would see a population decrease. That would be the next thing that would need to start happening. So that is definitely not happening as people are coming in droves. Yes, there are certain people moving away for affordability reasons. I am seeing that, but it is nothing in comparison to the amount of people that are moving here for lifestyle reasons. And so the offset is definitely there, and we are not seeing a population decrease in any way, shape, or form. After that, you would need to see a decreased rental demand and increased vacancies. And we manage almost 700 properties, and I can tell you our vacancies have never been lower, and there is still massive, massive demand for rental properties. So we're certainly not seeing that indicator as well. Now, keep in mind, all of these things need to happen 12 to 18 months prior to any softening in prices. So when these indicators start to happen, you can be sure that I'm going to tell you guys first that we are entering into the next phase of the market. There are strategies, there are selling signals that we'll use in order to make sure that if you're thinking about buying, we pump the brakes. If you're thinking about selling, we do it intelligently and we don't miss our mark. And so you can count on me to be your eyes and ears to the market. We know that following every boom is a slump, things are going to shift, and to be fair, I welcome that. We started Vantage West Realty in the midst of a global financial crisis. We're built for this, and this gives us an opportunity to showcase our marketing prowess. It gives us an opportunity to showcase our negotiating prowess. I welcome that market, but we're not there yet. And when we are there, I will absolutely be the one to tell you guys, but right now, for the foreseeable future, there's nothing on the horizon that suggests that Kelowna is going anywhere but up. We will continue to watch all market drivers, all market influencers, and have our ear to the ground for you. But until then, we'll just keep on rocking. If you want to see what your home might sell for in today's seller's market, you can start that from right here on the blog. If you're interested in poking around first to see what homes are available in this very low inventory market, you can do that from right here on the blog. And don't forget, we also have another link, which I'll put below, called Coming Soon, which allows you to peek into the future and see what listings we've got coming up over the next couple of weeks. Hope you found this helpful, and we'll see you in a couple of weeks.